All right, let's kick this off. We're just kind of doing a test here and also kind of letting you guys know we're going to start doing some more live stuff pretty quick here. For the time being, we're just kind of testing stuff out and making sure it works. I do have a quick update for you if you want to check out SPY. Looking like we're probably going to close in a doji today. That's not necessarily a good thing here. In context, that sets us up for a measured move down to key support around 376.50, which is that base right there. We get into that, and it is officially going to be bear market. Back to the bear market. This was just a relief rally at that point. This is the recovery back to bear market. It can bounce out of here, but this is kind of the threshold. This is the line in the sand, so to speak. So just kind of be prepared for more volatility. Looking at the 2-hour chart, really not much difference. It confirms we've got the bearish measured move down. Now we're consolidating. As I move in closer, I'm going to start putting the dope on the screen for you. Had a diamond pattern here. This one's harder to see, but it's much bigger. So we're going to see if we hold in that range, and that takes us in an angular down to about 380. Today's bear target is 382 if we break key support at 385, and we did for a minute. So we'll see how that goes. In the meantime, this is one of those risk-off market conditions where swing traders will not prevail very well here, but it's a day trader's wet dream. We've had lots of perfect range trades, real easy to spot targets, and man, we destroyed it this morning together, trading all this mess. And essentially, if you weren't trading SPY, you were trading the same stuff on the ES, the MES, and in part on the NQ, but this isn't exactly what the NQ is going to look like. As far as identifying all of these targets goes, that's what we teach in our group. We show you guys how to catch these fish because, man, they are plentiful. When you know how to day trade, every other trade is easy. So right now I can kind of see a very quick little diamond setup on a 1-minute chart. There it is right there. This was essentially a bear flag. It broke over, tested, drew down from this angular support extension. Bam, respect my authority. It bounced with a double bottom to boot. Very nice move. We're back up to our expected liquidity zone, and this is where we'll find resistance. If we can get through this, cool. We could close at 388 today. I'd be okay with that. Otherwise, you know, we can certainly reject here and come back and play in this liquidity zone. And identifying these is what we do with our teachings. We teach you guys how to find this. All right. So real quick, I'm going to go and give you a quick setup on this diamond. I'm just going to show you how to draw one. And when you see them, they're usually not a sign of a reversal or anything like that. It's just a definition of expecting more volatility. And usually you can define the range of volatility when you draw these things out. And we're going to draw this one in space first. And we're going to assume there's a point here, even though it's hanging out, there's no price here. Connect the top. Connect the other side. And this is actually going to go to the top of that wick there. And this will define your range. Notice it's coming into a rising wedge. We can expect that this liquidity is going to be hard to get through. There's going to be a lot of limit orders waiting here. When we see this, we can automatically assume that we're going to find a trade setup in here, and likely we can take advantage of a quick break. If this is going to break over and become bearish, you can get a quick scalp. You know, almost a whole dollar in some cases, but we're looking probably for a 50-cent move, which is 5 points on the ES, man. That's genuinely worth doing. If it holds angular support here, well, we can walk back up in the channel and slowly wedge out through this. And that's why we always add a regression line. Whenever we see a channel, add a regression line. know where the midpoint is, because oftentimes you'll see price will go right to it, pull back and either consolidate or break. And if you catch a break, trade that break, ride it to the next target, bam, done deal. Whether you're day trading options on SPY or scalping something on the ES, whatever you got to do. These breaks are usually pretty easy to identify. So as I said earlier, this has been a day trading market. I would not want to start trying to swing trade much of this. We're going to wait for this to settle out. This whole regional bank situation is just tearing the market up, and it's beautiful price action for day traders, but man, it's a challenge for anybody trying to put anything longer than a few hours together. It really is. Well, just thought I'd give everybody a quick update. We're kind of testing our system. We'll get stuff out more live. We've embedded our feed into our website, and we're making some stuff happen behind the scenes here. So I apologize for our hiatus. We've been kind of off the public view on our YouTube channel for quite a while now, and we've got some stuff back together. We just kind of needed to get some stuff taken care of. Here's that trade. Very nice. And later on, if we break that support zone, like I said, anytime there's a channel, there's a regression line. Mark it out, know where it is, and there's your definition of range. The diamond pattern. I'll let this finish out, and then I'm going to sign off. So, come to think of it, these kind of plays I usually confirm with my 5-second chart. And I'll get into that as time goes on. You guys will get to watch us do some really fun stuff with a 5-second chart. In fact, let me see if I can get that on another screen real quick. Let's see here, there is some short-term support right here on the 200 period. That's always expected. If you guys have watched our stuff before, we know that the 200 period on any time frame is just like, it's treated like a moving pivot. It's sort of always going to give you a key point for support or resistance. A lot of the algos will pay attention to that, and they will take profit on a quick bar right on that 200 pretty regularly. So they were short on that break and right to that 200. Bam, they're going to double bar this. They'll run it back up. The third bar is the one that will tell you if you can continue this trade short or if you should take profit with the bots. Also, one thing to know when you have a channel move like this, you get a rejection off regression and a break through the angular support. Oftentimes you end up with just a measured move based on this distance here outside the channel. And that's looking like that is playing out right there. Done deal. All right then, guys. Stay tuned. Go ahead and hit that, hit that bell. Let yourself know when we're live again, and we're going to do it a lot more often. We got a lot of stuff coming. And, we're going to do what we can to get out to the public with what we do behind the scenes. And we show you guys how to do all this stuff. In some cases, our moderators are with you in a one-on-one basis, if that's what it takes to teach you how to trade price action. We do it. All right, guys, we'll see you around. Thanks for joining us.